Hey folks, Ray Nakon here from Royal LePage Credit Valley Real Estate, and I have the distinct pleasure of speaking with Michael Dorego from Northwood Mortgages, who we're going to be talking about reverse mortgages today, actually myth busting some of the misconceptions around reverse mortgages. Now, I have some alarming stats that I've researched for this particular interview, and CARP, which is the Canadian Association of Retired Persons, did a study, and the number one worry amongst seniors is financial issues. Not healthcare, if you can believe it, it's financial issues. And a second study by the Healthcare of Ontario Pension Plan did a study as well, a survey actually, and 44% of those surveyed, 55 to 64, had less than $5,000 in savings. Staggering amount. And of those 44%, over 50% of them said that they will have to put off retirement going forward. Isn't that a staggering amount, Michael?
It's sad, yeah.
It is. It's staggering.
Sad, yeah.
Now, there is a product, and Michael's well versed on it, being a mortgage agent, and that is the reverse mortgage. And we want to dispel some of the myths out there in regards to the reverse mortgage. So, Michael, can you just give a brief background on exactly what a reverse mortgage is?
Sure, right. Reverse mortgage, in my opinion, is one of the most misunderstood mortgage products out there. What it is in a nutshell is you're able to take some of the equity out of your home as actual cash in your pocket and use it to supplement your retirement, right? So for example, if you're getting, $600 a month from CPP, $500 from old age security, $1,000 a month times two people, $2,000 a month is not a lot of money nowadays, right? So the other issue is a lot of seniors, because they're retired, they don't actually qualify for a conventional bank mortgage, right? So even if they want money out, they don't qualify to get it, right?
I see.
The other issue there too is that a traditional mortgage or even a line of credit comes with monthly payments. So you're basically getting money out, but then you're setting yourself up for a monthly debt payment as well. A reverse mortgage is essentially a way to get money out of your home without obligatory monthly payments.
Oh, that's amazing.
Right, and then you can use the money as you wish, right? So if you've got it, if you need to pay some bills, if you needed to maybe make some necessary renovations to your home, if you're getting a little bit older now and you need to make some rooms or parts of the property more accessible, those are all things you can do with the money.
That's amazing. Now, do you think that this product is very misunderstood?
It is, yes.
Oh, and that's why we're here today, to break some of the myths around this product.
Yeah.
But as you saw from the stats that I iterated earlier, you can see that there is definitely an issue with the senior population.
Oh, yes.
And a lot of that too has to do with pensions that perhaps they took out 15 years ago that aren't indexed, that haven't kept up with inflation, and have put these seniors in further financial difficulties. So this would be an ideal product for the senior person in that situation, right?
It is, yes. And also too, what we're seeing is a lot of seniors who are retired, but they still have a mortgage balance. So, now with mortgage rates going up, a lot of seniors who had a mortgage, they had their mortgage 5 years later, these mortgage payments are way higher than they were before. And the problem is their income hasn't increased as much as the mortgage payment has. Right. And what the reverse mortgage can do, my favorite part about it is that, if you have a mortgage of, let's just say $2,000 a month, for example, the reverse mortgage company will go ahead and pay off your mortgage, and that $2,000 a month mortgage payment is now down to zero.
Wow.
So that's an extra $2,000 a month coming into your pocket. That's like having a part-time job working 40 hours a week.
Well, how helpful would that be for a senior that's struggling, not having to make a mortgage payment? Now, we are here to bust the myths around this product, this financial product, because I think there's a lot of misconception out there about it. So one of them is you no longer own your home. Michael, what do you say to that?
Great question, Ray. Now, a lot of the misconceptions come from the fact that there was a lot of issues with reverse mortgages in the US. At one point, they were very unregulated. You had American people taking out 95% of their home's value. So imagine what happened in 2008 when house values dropped. many people were now in negative equity, right?
Right.
Now, the beauty about the reverse mortgage in Canada is that it's very highly regulated. Everything is designed to protect the homeowner, right? So the number one concern is you no longer own your home. That's not the case. With the reverse mortgage, the homeowner is the sole person or people on title. The reverse mortgage company, it does not go on title. They do not have any ownership of your home. You can live there for as long as you want, and it's up to you to sell it when you want to sell it.
I think that breaks that myth, folks, right there. But there's also another one. You end up paying more than what your house is actually worth. What do you say to that myth?
Yeah, that's also another misconception. So the beauty about the reverse mortgage is that the companies, pretty much all of them rather, have a negative equity guarantee. What that means is that you can never owe more than the house is worth. So let's just say, worst case scenario, you have a reverse mortgage for 30 years, your home 30 years later is worth $1 million. You happen to owe $1 million on the reverse or 1.2 million on the reverse mortgage. You pass away, your kids take over the home. Your kids do not have to pay the 1.2 million. They would only pay whatever the house is worth. And the odds of that happening are very slim, because with the reverse mortgage, the maximum you can borrow is 55% of your home's value. So you still retain the other 45%. And on top of that, you can only take out 55% when you're in your much later years, like closer to your 80s, right? So someone who's 55 years old, they cannot get anywhere close to 55% of their home's value, right? And as a realtor, you know that home values also go up.
That's correct.
Right. So
exactly.
even though
Another point.
Exactly. So even though the reverse mortgage balance is increasing a bit, the home value is also increasing with it as well. So we can never say guarantees, but there's a very good chance that later on, 20, 30 years later, if you live that long, there will still be equity in the home that your children could either pay off the reverse mortgage and keep the home for themselves, or they can still sell it and still receive a very large inheritance from the house as well.
That's a great point, folks. And I think a lot of people forget that aspect of it, that if, let's say you have a reverse mortgage for 15 years and you took out $500,000, your house probably has increased significantly in that 15 years and may have even made up the difference of what you took out in the reverse mortgage. Now, a lot of people think that, hey, maybe I could get evicted through this reverse mortgage, or somebody can come and take the house away from me. What do you say to that? Because that could be a real big worry, right?
Of course,
if that could exist.
Absolutely. You know, you work hard to pay off your home. The last thing you want to do is have it taken from you, right?
Exactly.
Now, the reality is, generally speaking, the time you're evicted from a home is if you miss payments on your mortgage, right? So if I have a mortgage with a bank and I don't make the payments, they will then take the house from me. But you see, a reverse mortgage has no monthly payments. So if there's no payments to make, there's no payments to miss. Right. All they require is that you keep up on the property taxes, which, as we know, you have to pay property tax. No matter if your house is paid off to zero, the government wants their property tax.
You gotta pay the piper.
So as long as you pay that, and you want to just try to keep the house in good condition, the reverse mortgage company cannot take the house from you.
Right.
Now, most couples are married when they retire. What ends up happening is the first spouse may pass away. The second spouse still gets to keep the home. The reverse mortgage balance is only due after both homeowners have passed away, or if the house is sold.
Okay, so there's only two conditions for
exactly.
that.
So the house is owned by the homeowners,
right, and
not by the reverse mortgage company.
Okay, now another myth I guess out there, Michael, is that people think that this is a highly weighted interest on reverse mortgages. What do you say to that? Is that the case?
The rates are slightly higher than the banks. That is correct. The thing is, though, we're comparing apples to oranges here, right? Because right now, let's just say a bank mortgage is, 5.5%. Well, the thing is, you're making monthly payments on that mortgage. So that lender is making money from day one of your mortgage. Now, with a reverse mortgage company, they are giving you, in many cases, hundreds of thousands of dollars, and they are getting absolutely no payments for potentially years.
Right.
So imagine, Ray, you retire at 65, and you live in the home till 85, that reverse mortgage company is not going to make $1 from you for 30 years.
Wow.
Right.
Yeah,
So right, and then as we know, the cost of borrowing changes, so the rates do need to be a little bit higher because the reverse mortgage companies, their lending costs also increase and decrease as well too. So the rates are a little bit higher, but they're not to the point where they're outrageous.
Right.
Right.
So let's kind of put this all in a nutshell here now. So you can look at it in the sense that if you take $500,000 out, that's considered the principal aspect of it. But you're really only going to be making interest payments on that. You're not paying back that principal as you would in a traditional sense, right? And
Exactly.
it's only when you sell or you pass on that the principal will be paid back to the lender.
Exactly. There's absolutely no payments until both homeowners pass away or the house is sold. And to me, that's where the apples to oranges, because you can get a line of credit, for example, and use it as you wish, and the rate might be a little bit lower. But the issue there is that as soon as you take money out of the line of credit, now there's a monthly payment attached to it, right?
Right.
So whereas it really comes down to what the homeowner wants. Do you want to have a monthly mortgage payment every single month you have to pay, or would you rather live in your home and have 0 monthly payments? There's really no right or wrong answer.
Right.
It's whatever the homeowner wants and also what they could qualify for, right? Because again, if a homeowner needs a mortgage of $250,000 but they do not qualify for it, then there's no other option but maybe to get a reverse mortgage or maybe even downsize. Again, downsizing is always an option, but it's whether or not the homeowner is ready to downsize or not.
Right. Now, that's also, we've talked about giving with a warm hand as opposed to a cold hand.
Yes.
And let's face it, folks, our children out there, my daughter's 25, my son's 30. It's difficult for them to get a down payment towards a home purchase, considering the escalating and high prices of real estate today. So this would also be a great means of extracting money out to help your children or gift your children some money to set them straight, right?
Right. Well, Ray, as a realtor, you know that the average home nowadays in the GTA or Peel region, I mean, it's upwards of $1 million plus, right?
Exactly.
And what's the minimum down payment on a purchase $1 million plus? It's 20% down. That's $200,000. How many young families today can save up $200,000 to buy a house? It's almost unheard of.
Unheard of, exactly.
So now if the parents have a home that's paid off free and clear, or even if they have a small mortgage that they're paying on, they could take out a reverse mortgage and they can actually gift that money as a down payment while they're alive. They get to watch their children and their grandchildren grow up and live in a home that they own rather than they rent. And again, one of the concerns people say is, well, if I get a reverse mortgage, I'm leaving less equity for my children when I pass on my home. Yes, that is the case. But if you can help them buy their own home, that home is going to appreciate, right? So essentially one hand washes the other,
exactly,
right?
Exactly.
And if you live till 90 years old and you're going to leave your house to your kids and you pass on at 90, and assuming they're 65 or 70, I mean, they're not even going to qualify for a mortgage at that point. They're probably retired as well, right?
That ship's kind of sailed already.
Exactly.
Right?
To get your first house at 75 is kind of ridiculous, right?
Yes, exactly.
So the beauty is you can take out a reverse mortgage, give the money as a down payment, help your adult children buy their first home. And the beauty with the reverse mortgage is that while there's no monthly payment, you are able to pay down some of the interest on it as well. As you know, with most mortgages at the bank, you have a prepayment option. The same thing with the reverse mortgage. You can also pay down some of the interest if you want to minimize.
Wow, I didn't realize that.
Yeah,
I didn't realize that. That's and that would obviously be much less than if you. It would be much less than if you still had a mortgage and probably making payments on that.
Oh, way less, because the option is yours. You can pay as little as you want. You can do $100 a month, $200 a month. You can actually pay up to whatever the interest amount is for that month. So for example, if the interest accumulation is $1,000 per month, you can pay up to $1,000 per month if you choose to. Wow. Again, the beauty is that the option is there if you want to take it as well.
Why would it benefit someone to give you a call first as opposed to just go to Chip, let's say?
Great question, Ray. Now, there was a time when Chip was the only player on the block, right? You know, if you wanted a reverse mortgage, you really only had one option. Now, we know with one option, means there's not always it's not always the best option, right? So
Sure.
the beauty now is that there's 4 companies doing reverse mortgages in Canada, and we know that when you have more options, more competition means more options for the clients, right? So the beauty is with working with someone like myself is that I understand these 4 companies. I work with all of them. So I know the pros and cons of each one, right? So for example, for one family, CHIP might be the best option for them. For another family, Equitable Bank might be the best option for them, right? Believe it or not, there's even now reverse mortgages for people under the age of 55.
Wow.
That wasn't heard of before. There's a reverse mortgage company now where you can get a reverse mortgage at any age up to 44% of your home's value, and it's fully open as well.
Wow.
Right?
Wow.
So coming to me is no different than going to a car insurance broker. You want to get the best pricing and you want to get the best product for your needs, and that's what I do.
100%.
And the beauty is I get paid by the company directly. So there's absolutely no charge to the clients.
So why not use your experience and your expertise?
Of course,
I
well,
mean,
it can save them
if it's
thousands of dollars.
Not an extra cost to you, the consumer, then it's a no-brainer.
Exactly, and I'm impartial because to me, if you call me, I can give you an unbiased opinion of the 4 different companies. But if you call that one company directly, of course they're going to toot their own horn. They're never going to tell you to go to their competition, right?
Well, the way I see it too, Michael, I could be wrong, and correct me if I am, but it's much like when you go to a mortgage broker, the mortgage broker deals in your best interest.
Right.
When you go to a bank individually, the bank is going to look out for their best interest.
Right.
So why not have someone in your corner helping you through the process, especially if you're unfamiliar with it?
Yeah, and again, it doesn't cost anything. So to get free advice custom tailored to your needs, to me it's a no-brainer. Just use someone that knows the products inside out, and it's going to recommend something specifically based on what your specific needs are. To me, it just makes more sense.
Absolutely. You know what, folks? I learned something too from this, and Michael, that was a wealth of information. I think the people out there will really appreciate this video because it will help a lot of people, or it could help a lot of people. And if you do have any questions or comments or concerns whatsoever, feel free to reach out to Michael. He'd be able to help you with this. As you see, he's very well versed on the product and he can assist you moving forward. So anyway, Michael, I really want to thank you. Like I say, this is so valuable for the people out there, and I'm so glad I had the opportunity to speak with you. Thanks, Michael.
Thanks, Ray. Appreciate it.
Thank you.